Hi everyone, it's a daily 10-minute business and finance news wrap for this Tuesday, the 13th of September 2022. Later, staff found unfit to hold its Sydney casino licence. But first, let's go to the growing disconnect between business and consumer confidence. The Westpac Melbourne Institute Consumer Sentiment Index found today that confidence for consumers is still below its 100-point index level, which means pessimists far outweigh the number of optimists out there. But NAB's business survey shows that confidence is above its long-run average. Why? And what does it mean for the economy? And more importantly, how businesses are dealing with inflation. I spoke earlier with Alan Oster. He's the chief economist at NAB. Alan, both conditions and confidence are both rising despite higher interest rates and inflation. Is that unusual?
It's unusual in the sense that you would expect confidence to be sort of hit as rates go up. But, really the survey is saying the economy is good enough for people to feel really quite confident. And the other thing that's really important is that the impact of interest rates really haven't hit yet. And based on what we see in the banks, et cetera, it's pretty October, November before they'll have a big impact. And that's where I think you'll start to see the slowing.
Yeah, can we go into more detail about that? So when exactly do you start to see that slowing?
Well, we think it'll be in the final quarter of the year. So you'll see it from October. We know what our book is doing. We know what CBA is doing and the others. And, we all come up with somewhere in October, November, people are going to find up to $400 a month out of their savings. And so that's when I think you'll start to have an impact. And you just can't assume that those sort of increases, together with a world economy that is slowing and looks quite sick, won't have an impact. They will.
The result that came through right now, though, why are they confident? Which parts of the businesses are doing well? And on the flip side, what are businesses concerned about? What kind of pressures are they facing?
Well, what we're seeing is obviously the miners are doing really well. Because of high commodity prices. Transport, which used to be a lagging sector, is also very strong, and hospitality is a really strong part of the economy. The only sector that's sort of not doing as well is construction, where everyone knows about the profitability issues. But when you turn to confidence, it's interesting that miners are not that confident, and retail and wholesale are also not that confident. So things are good, but they're a bit nervous that maybe they won't stay like that forever.
Okay. What are businesses saying about the way they're dealing with inflationary pressures? And more importantly, is it being passed on to the consumer? Are the consumers paying for it?
Short answer to that is the consumers are paying for it. Because what we're seeing is purchase costs are still high. They're not quite as high as what they were, as some costs come down a bit. But inflation is not coming down. And so if we look at our survey and try and make a projection into that, it says that the trim mean might increase by 2% in the September quarter. And, everyone was a bit shocked when it went 1.4 in the June quarter. So bottom line, business is finding things good enough that they just fully pass on all their costs.
So you're predicting another two more rate rises. When we say two more, 25 basis point increases,
yes,
right, to the cash rate. Is there a risk, though, that we'll see more? And how detrimental to the economy would that be?
Well, there's always a risk. So if the economy stays stronger for longer, the Reserve is aware that, it takes lags before these things impact. If rates basically went up to 3.5%, which is where the market's got, I would seriously be concerned about the outlook for the Australian economy. I think you get to about another 50 basis points over the next couple of months, sit and watch and see what happens, because that's the period when the rate cuts or rate rises have a big impact.
Alan Oster there, the Chief Economist of NAB. To the Australian share market now, which rose by 0.7% on the 200, 7,009 points. For more, I spoke earlier with Robert Talevski from Activus Investment Advisors.
Australian shares opened up 0.5%. We've seen a fairly broad-based rise across sectors, with 10 out of 11 sectors up. The energy sector was the top performing sector, with Woodside and Santos leading the way. Overnight, the broader US stock markets rallied strongly, pushed by investor optimism that inflation might be falling. Tumbling commodity prices have sort of lifted hopes that the worst of inflation may have passed us. Markets might also have some comfort in that the Fed hasn't lost control of inflation.
We'll go into detail about inflation in a few moments. Today on our market, though, energy and lithium stocks really drove the gains. Why?
Yeah, so energy and lithium sectors have generated double-digit returns over the past 12 months. This has been quite noteworthy, given that most other commodity prices have been falling. Lithium forms a key part of batteries, which many of which obviously goes into EVs, electric vehicles. So the increase in the oil price may have contributed to, I guess, increasing demand for lithium and electronic vehicles going forward.
Okay, one of the corporate stories of the day is Star Entertainment Group, found to be unfit to hold a casino licence in New South Wales by the state's casino regulator. Can we run through what this means for the company? Because, of course, Crown was found of doing the same kind of thing, which ultimately contributed to it being taken over.
Yeah, this means that Star could potentially lose its licence to operate a casino. The short cause notice gives the group 14 days to respond. They had years to really address the issues that were raised initially. What could potentially happen in terms of next steps? As you said, we could see what we saw, with Crown Resorts, some hefty fines being handed out to them, and the appointment potentially of an independent committee to oversee Star's operations for a period of time.
And you mentioned briefly the US inflation numbers. They are coming out later tonight. How important will this be and why?
So Tuesday night's US inflation report is expected to show an 8.1% increase in inflation year on year to the end of August, down from 8.5% in July. This suggests that there's been that sort of further cooling of consumer prices. We should see some other data coming through on the following day around consumer or consumption levels, and really altering for this sort of increase in inflation. These are really crucial data points for the Fed. And obviously it's consideration about how many more interest rates they might increase. But saying that, however, we expect to see a 75 basis point, a supersized increase in interest rates next week. However, we expect to see smaller increases going forward from here on in.
Robert Talevski there from Activus. This SBS On the Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice, and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decisions.